across much of the commentary around the fall of Silicon Valley Bank is talking down comparisons to the Lehman Brothers collapse in 2008, which was one of the major factors behind the global financial crisis. To get a sense of the implications for Australia and Australian banks, I spoke a short time ago to Anna Bligh, the Chief Executive of the Australian Banking Association, and I began by asking whether she agreed that the collapse of Silicon Valley Bank was not a case of Lehman Brothers 2.0.
Absolutely. What is underpinning this bank failure is, well, a number of things, but not least of all, it's a very niche bank with high exposure to one part of the economy, and that's the part of the economy that's been quite volatile and troubled, and that's the technology sector. Lehman's had their problem originated in their mortgage book, in the core business of a very large banking book. And if you look at the difference in contrast, Australia's banks, whether they're large or small, do not have that kind of single exposure into any particular part of the economy. They're very diversified and they're very well placed to manage. If one part of one sector of the economy has a wobble, they've got a very diversified book to manage that risk.
And what, if anything, is going to be the effect on Australian banks out of this collapse?
Well, as you may have heard the Treasurer say yesterday, it does look as if there might be some Australian companies that had money involved with the Silicon Valley Bank. I'm not sure whether that's as equity investors or as depositors, but we have already heard that the US authorities will make sure that depositors in Silicon Valley Bank, that any losses will be recovered. So at this stage, we're not expecting any significant contagion into the Australian banking system. Obviously, everybody's monitoring very carefully, but it is important for Australians to stay calm and remember that we have some of the best capitalised banks in the world. Our regulatory framework is, in many respects, much tighter than that in the US. For example, again, whether you're large or small in Australia, you are required to have certain or to meet certain liquidity requirements in order to hold your banking licence. In the US, smaller banks like the Silicon Valley Bank did not have, they're not subject to liquidity requirements. So Australia's banking system is very well protected and very well regulated. Obviously, everybody will watch the markets globally for the next couple of days. It's, something of this size is not to be dismissed easily. But right now, there's a lot of confidence that Australia's banks will be fine.
What, if anything, does this collapse say about where the US economy is at now?
Well, good question. I think the other thing to remember is that there are a lot of differences between Australia's banking system and the US, not least of which is that the US has numerous, like thousands of very small banks that might only bank the community in which they're located. So there's actually been 561 banking failures in the US since 2001. In Australia, there's not been one failure, whether it was GFC or anything else. So what we know is that the US is it's not an unusual thing for smaller banks to fail, and the US authorities have a lot of practice and a lot of experience in resolving those failures and protecting customers. But it tells us a little bit more about what's happening in the tech sector in the US. And that obviously has global implications. The Silicon Valley tech sector out of the United States has not only been a really important part of the US economy, it's driven a lot of innovation across the world. So that's one of the reasons I think that the authorities in the US have been so keen to ensure that those startups and fintechs that were funded by this bank are not going to see serious losses, because they want that innovation and those companies to continue.
And just back home on interest rates, we've seen some banks not pass on the latest increases. Can you talk us through that?
Well, every bank obviously has their own commercial considerations to take into account. I'm not going to speculate on all of those because I'm not privy to them. They don't necessarily, they're commercial in confidence. It's why we have a very competitive banking environment. In fact, I had one banker say to me the other day, they can't remember a time when mortgages were as competitively sought after and fought for as they're seeing right now. In fact, refinancing of loans right now, that's customers going and getting a better deal, is outstripping the pace of new loans for new customers. So in an environment where new customers are perhaps not jumping in with the rates at this level, it means that every lender out there is fighting harder for those customers that are looking for a better deal. So I think we're going to see a lot more of that.
And I guess there has been some criticism of the banks for not lifting the deposit interest rates with the same speed as they have lifted the interest rates on loans. What do you say to that?
Well, as you know, the Treasurer has tasked the ACCC with the job of investigating the pace at which banks have been passing on to not only borrowers but to depositors. I think I'd be surprised if we didn't see out of the ACCC commentary on some banks doing one thing and some banks doing another. That's what happens in a robust commercial environment. But again, we are seeing significant increases now in deposit rates, and I think it's important for customers to know that there are good deals out there and they should be shopping around. And I look forward to seeing what the ACCC has to say when they've used their powers to examine these matters in full.